Hello everyone, this is Justin Smythe from nextbigtrade.com. This is the index review for January 17th, 2025. The S&P 500 closed up almost 3% for the week this week on the biggest rally since the correction started in early December of last year. As I discussed in the newsletter, the timing model is switching back to being bullish and looking for long trades this week because the criteria in the timing model basically all moved bullish this week, which forces the timing model to move bullish as well. So it's possible we have a correction bottom this week. One thing that could happen is we could potentially have a rolling correction. If you look in the correction playbook, you can see that it's common for the stock market to have multiple 5% corrections over a multi-month time period, and that is a possibility here coming off such a huge rally. So I think that's good to keep in the back of your mind, but in terms of the weight of the evidence, it definitely shifted more bullish this week, which means that, we're going to get at least probably a tradable bounce here, if not more. But again, it's also possible that we get a bounce, then we have maybe another pullback, and it kind of becomes more of a sideways thing. So be slightly cautious. And the evidence, as I discussed in the newsletter, there's two things that are against this being a bottom. One is that this correction was only 6 weeks long. That's on the shorter side, which could lead to the multiple months of a rolling correction idea. And then the other thing was the volume in individual stocks was not great. And when you get stronger volume with new breakouts, that shows more, buying power of the institutions. The volume on the breakouts this week was on the lighter side. But other than that, there were multiple sector moves that occurred and a proliferation of stage 2 breakouts. So that's really what's shifting the outlook back to the upside. One other thing that happened this week was the index volume was above average on the upside, which is also bullish. This tends to happen coming out of the corrections. We saw this back in April 2024 at the tail end of the correction in August 2024. Even though this was a down week, the bulls won the week, and there was big volume back there. There was even big volume in September when the market started to accelerate higher off of a 1 week correction. So again, we're seeing big volume coming into the market on the upside, which is another confirming factor to look for more upside for the stock market. Moving to the daily chart, another bullish thing that happened this week is the election gap up was retested and successfully held. On Monday was the low of the week this week. We got more into that gap and it held, and then the market bounced strongly the rest of the week. You can see the increase in volume too, especially on Friday was options expiration, but even on Wednesday there was an increase in volume and gap up after I think it was CPI that was released. So bullish week for the stock market. There's probably room for a little bit of a pullback next week, but we've got a gap here now. If we hold that gap on the pullback, that would be a good sign. And then looking for more upside here. We didn't get the retest of the 30-week moving average, which is incredible how long this market stayed above this moving average. But again, maybe we have another correction over the next few months. Maybe we finally get back down there. We're going to get back down there at some point in 2025, I'm sure. But for right now, I think we need to look for more upside. NASDAQ 100 showed an increase in volume on the weekly chart coming out of It's low. Again, the same thing happened after multiple corrections in 2024, and it just happened again this week. So bullish for the NASDAQ 100 to see some volume coming in. NASDAQ 100 also bounced at that election gap as well and really held support, the same area that it held on the first pullback too. NASDAQ Composite had big volume to the upside. And again, just like these other corrections, there was big volume coming out of the correction lows earlier or last year, which we're seeing again this week. On the daily, there was huge volume, selling pressure, which we highlighted before this week, and then, getting some buying pressure this week. So it's like the bulls finally stepped back up, and we'll see if this continues next week, but they held key support levels on the pullback, and they, defended where they needed to kind of push this market back up. Russell 2000 up 4% for almost 4% for the week, bouncing kind of where it needed to as well, holding the 30-week now. As we've discussed, it's fighting. It's like the same level that we've been fighting since early in 2024, and we just held again now where we were threatening breaking down. So if we continue to hold, that's bullish. The Russell benefited from the strength in the financials, which really was a positive factor for the stock market. We'll talk about that in the sector review. But the big banks reacted very well to earnings, and that's another reason to flip back bullish here. Inverse ETFs were looking good before this week, and then monster volume comes in and smashes these back down when the market reacts positively. And this is something that we've seen at the end of corrections in the past too, especially the August correction. There was huge downside volume in these inverse ETFs, and that was the biggest correction of 2024. And we're seeing the same thing here, massive dumping after a big potential correction low in the stock market. So again, another signal that institutions are getting out of inverse ETFs and looking for more upside. Same with SQQQ. Same thing in August 2024. At the end of that correction, massive dumping here, indicating potential more upside in stocks. Advanced decline line flips back above the 10-week moving average already. Remember, we were going to monitor this and see when this occurred to flip back bullish. You can look at, there was a big turning point in this back in October 2023, November, where the uptrend started. And we've got a crossover here. So we'll see if this holds, but this could indicate more upside for stocks. VIX breaks bearish. This was setting up for the bulls as well. Starts to break out and then breaks down. Failed breakout here. That's bullish for stocks. Volatility tends to collapse when stocks go up, and that's what happened here. Finally, the breadth. This was the reason why last week in the newsletter I said, cut down on the short positions. The market's way too washed out to be, to continue pressing shorts. And then we saw this positive divergence last week in the short-term breadth. And then that led to an explosion higher in breadth, short-term breadth this week when everything rallied and really blew the shorts out of the water. This gets overbought now in just 1 week. And then the question is, are we going to is this a good time to short again, or are we in a new uptrend again, or starting to look, should we be looking for more upside? I think the factors have aligned to look for upside now. So basically what happened if you look at the October 2023 low, what can happen is this stays overbought for multiple months when things start rallying. And so even though it's overbought now, it might have room to kind of stay up here before the next pullback if things remain bullish. So that's, notice how quickly breadth changed when the market bounces. And then if we look at the percentage of stocks above the 50-day moving average, this finally got oversold over the last few weeks. Again, a reason not to press shorts. The shorts worked much better back here. And then if we do continue to rally, we're only at 40% here. We've got room to run, more stocks to kind of move higher before another correction. So overall, breadth still has, there's more stocks that can participate in this rally. I think that just the factors have aligned to look for at least a bounce here, if not more. The volume is showing up in the indices, showing up in the inverse ETFs. Individual stocks still not great, but if there's more stage 2 breakout activity next week, earnings season is continuing to ramp up. If more breakouts are occurring, I think we have to switch back to bullish here, and we'll look at some sectors in the sector review to really focus on that might provide some really good trading opportunities to the long side over the next few weeks.